Hi, I'm Julian from Escher and Guild of Agents. Today, we're looking at Kaleido Life, an AI-powered insurtech transforming life insurance from a dead policy collecting dust into a dynamic, living asset. Think insurance, savings, and credit line in one tool on your phone. With $84 trillion in wealth about to change hands, they're positioned at the perfect moment. Link below to the pitch room at Escher, and we'll cover the app in the startup room at Guild of Agents.
Let's be honest, when you think about life insurance, what comes to mind? Probably a piece of paper you pay for every month, stick in a drawer, and then hope your family never, ever has to use. It's a product built for death. But what if that's all wrong? What if it could actually be one of your most powerful financial tools while you're living? Today, we're going to dive into how technology is completely flipping the script on this old-school safety net and turning it into a dynamic, living asset. So here's how we're going to break it all down. First, we'll tackle the big problem with insurance as we know it. Then, we'll look at this massive, once-in-a-generation opportunity that's opening up. We'll cover the evolution of tech that got us here, and then the exciting part, what a living asset policy actually is and why it might just be the future of our financial well-being. All right, so let's get right into it, the fundamental issue. For so many of us, that monthly life insurance premium feels like you're just throwing money into a black hole, right? It's a payment for some far-off what-if scenario, which doesn't do a whole lot of good when you've got bills that need to be paid, well, today. And this slide really nails the shift we're talking about. We're moving from this old idea of a dead policy. You know, it's an expense, it feels kind of morbid, it's just a static document collecting dust in a file cabinet. And we're moving toward a living asset, something that provides liquidity, it's dynamic, and it lives right on your phone just like everything else. Now, this financial pressure is especially real for a group that demographers call the sandwich generation. These are folks usually in their 40s or 50s who are literally squeezed in the middle. They're trying to raise their own kids while also financially supporting their aging parents. For them, every single dollar is stretched to its limit. And that squeeze, it has a very real-world impact. I mean, look at this data. Financial stress is keeping nearly 60% of Gen Z and over 40% of millennials up at night. So when you're already feeling that kind of pressure, a life insurance bill that gives you zero benefit right now, it starts to feel less like a safety net and more like just another part of the problem. And this is exactly why experts call traditional insurance a grudge purchase. You know you probably should have it, so you buy it, but every time that payment comes out of your account, you kind of grit your teeth. It feels like a burden because it locks away money that you could really use right now. It's designed to solve a future problem, but in doing so, it can make today's problems even harder. Okay, but all of that frustration, that grudge, it's actually creating the perfect storm for a massive change. A true once-in-a-generation opportunity is bubbling up from this industry-wide problem, and it's being driven by a few incredibly powerful forces that are all coming together at the exact same time. We've got three huge megatrends that are colliding right now. First, the largest wealth transfer in human history. Second, a serious liquidity crisis hitting younger generations. And third, we're at this critical inflection point where technology and regulation are finally making real change possible. And just to give you a sense of the scale here, the numbers are absolutely staggering. We are talking about an estimated $84 trillion. That's trillion with a T. That's the amount of wealth expected to move from baby boomers to younger generations by 2045. It is, without a doubt, the largest movement of capital in history. But here is the massive paradox. Even with all that money about to change hands, we're dangerously unprepared for it. As you can see here, more than half of Americans don't even have a formal estate plan. So there's this enormous gap between the wealth that's on its way and our actual readiness to manage it. Now, people have tried to fix insurance with technology before. The industry calls it insurtech, and taking a quick look at its evolution shows us exactly why the earlier attempts got so close but never really solved that core problem we talked about. So, the first wave, InsurTech 1.0, was all about speed. Companies like Ethos made it so you could get a policy in minutes. Super convenient, but it was still just a dead policy. Then came InsurTech 2.0. Think companies like ULife. They tried to make it more engaging, with rewards and perks for healthy habits. It was a cool idea, but it still didn't give the policy itself any real financial use. Both of them just kind of nibbled around the edges of the real issue. And that, finally, brings us to the new wave. This is the one that tackles the core problem head on. This is where the whole concept of a living asset really clicks. It takes the speed from the first wave, the engagement from the second, but then it adds the one crucial piece that was always missing: actual, tangible financial utility. So, how in the world does a living policy even work? Well, it's actually pretty simple. First, a piece of your premium goes into building a cash reserve. Just think of it like a savings account that's growing. Step 2, that reserve you've built up now acts as your own personal line of credit. Third, you can then access those funds whenever you need them for whatever you need them for at a really low cost. And here's the kicker: your good financial and health habits can actually improve your terms in real time. Really, the easiest way to think about it is like this. It's a hybrid. It's part life insurance, part savings account, and part credit line, all bundled together into one single seamless tool on your phone. Now, the tech that makes this possible is a huge shift from static to dynamic underwriting. With traditional insurance, they figure out how risky you are once when you sign up, and that's pretty much it for 30 years. But with new AI models, your risk can be priced continuously, even daily. It's kind of like those car insurance apps that reward you for good driving. Here, good financial habits or getting healthier can mean your policy actually adapts to you, maybe even lowering your costs over time. So look, this is about more than just a clever new product. It's about a fundamental change in our relationship with our money. It's about moving toward a future that gives us something you could call financial dignity. And what does that actually mean, financial dignity? Well, it means you are in control of your assets. It means transparency, so you're not in the dark about how your financial products work. It means you can get access to affordable capital when life happens, as it always does. And maybe most important of all, it means your safety net should be something that empowers you while you're living your life, not just a payout after you're gone. And that really leaves us with a powerful question to think about. We have always been taught that insurance is a safety net. It's there to catch you if you fall. But what if that very same tool could also be your financial springboard? What if it could give you the security and the flexibility to take bigger leaps in life? Because ultimately, this whole vision isn't just about reinventing an old product. It's about building a more flexible, a more responsive, and a more empowering balance sheet for the next generation. And that's our explainer for today. Thanks for tuning in.